This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. We are getting a really late start today, trying to squeak this one in under the wire. Have just a little more than an hour left in August 23rd, and Wednesday, August 23rd, 2023, to get our DCA Wednesday stack done. If you're following us on Twitter at BTC Bulletin Pod, you would know that that's up and the reason why. And well, real quick, the reason why is it's been a really busy day. Today is an important birthday day in our family, so we went and did a range day for the birthday celebration. Shot a bunch of handguns this time. Last year, for the birthday celebration, we went to a range in New Mexico that rented fully automatic weapons and fired a fully auto AK-47, a fully auto MP5, and a fully auto M4, which is the carbine compact shorter version of the M16, and that was really cool. But today was handguns, so we had a couple of 9mm and a couple 45s, a Glock 19 and a Glock 21, for example, and a Beretta 92 FS that actually had a malfunction because it had been in storage for a while, and I left it in storage with fully loaded magazines, and that was a massive no-no. If you know anything about firearms, you compress those springs for 10 years or however long it had been, and maybe the springs will come back to life. Fortunately, the Beretta mags are super easy to rebuild. You just pop the bottom off and the spring comes right out. So not the end of the world, and we still had plenty of fun. So we did the birthday, did the range day, and then I had to run up to Daytona Beach, and that's not super far from here. It's a little over an hour drive, but was up in Daytona, then turned around and hauled tail back to here on the Space Coast of Florida. And so as promised, we're getting that DCA stack out of the way just in time. As I mentioned, today is Wednesday, August 23rd, 2023. And at the time of this recording, we're at a block height of 804,596. TikTok next block, that puts us just 35,404 blocks away from the next halving, which is still looking like it's going to occur on April 20th, 4/20 of 2024. People are starting to finally get excited about that, hearing a lot more chatter about the halving. Still haven't heard a lot of that minor death spiral FUD yet because of the halving. I have heard a lot of minor death spiral FUD this week, and that was because of the price drop. So that's another time when no-coiners and Bitcoin haters like to roll out the minor death spiral FUD. If this is your first halving cycle, the minor death spiral halving FUD is basically the theory that when the reward gets cut in half, miners will no longer be profitable. So enough of them will shut off that it will slow down the block time to the point where miners become even more unprofitable and more of them will shut off. And basically we would never get to the difficulty adjustment, and therefore Bitcoin would become unusable. And they roll that BS out every halving. Every halving it doesn't come true for multiple reasons, not the least of which is miners know it's coming, right? And one of the things you're seeing, even though the price of Bitcoin is down right now, and even though we're coming up on the halving, the hash rate is going through the roof because miners are getting all of their latest generation ASICs online, the ones that will be profitable after the halving, and they're still running their older generation like the S19 Pros, etc. Maybe even some Antminer S9s out there, and some of those will turn off when the halving occurs and maybe it becomes a little less profitable to run them. But two things happen with the halving. A, it starts the euphoric bull run where the price goes up and sets a new all-time high, in 6 months to a year. And everybody knows that's coming. So the miners know that even if they're mining at a loss right now, that the Bitcoin is going to increase in price. So ultimately, after the euphoric blow off top, even when the price retraces a little bit, mining is more profitable than it was previously because at the last halving, for example, after the halving, Bitcoin spiked up to $20,000, and then and then it dropped back down to like 3. But then it shot up to 69,000 on the 69,000 on the last halving, and that was a heck of a lot more profitable than even the peak of the 20,000. So even though they were making half the Bitcoin, it had 3 times the value. In addition, most major miners have electricity contracts, so they have to use the electricity whether it's profitable or not. So even though there will be a light switch at the halving when the miner reward is cut in half, they aren't just going to turn off their miners if they have to, if they've agreed to purchase that month's worth of electricity anyway. And then some of the miners that do get turned off, well, they don't get thrown in the landfill or recycled. They get snapped up on the cheap by people in places where electricity is a lot cheaper, and then they get turned back on. There's still Antminer S7s and S9s out there mining in places where electricity is free or nearly free. They're just not mining in places where it costs 10 or 12 cents a kilowatt hour. So there's a number of reasons why that's BS, and I just want you to know that it happens every halving, and I'm just waiting for it to roll out in full force. They're going to try and scare you that the halving is the end of Bitcoin, and it's not. The neat thing about the halving is it's almost like a rebirth of Bitcoin. It's like Bitcoin has a new genesis every 4 years, and that's one of the genius things about the Bitcoin core code that Satoshi envisioned. So I digress. Back to the statistics. As I mentioned, we were at a block height of 804,596, and Bitcoin was ringing in at a US dollar value of $26,405 US dollars. That is more than $2,000 cheaper than last DCA Wednesday, which is awesome. That means $1 US is going to score you 3,787 sats, 327 sats per dollar more than we got just last week. So if you're like me, when the price of Bitcoin is down, you're excited because you know that this isn't the death of Bitcoin, that this is just Bitcoin doing what Bitcoin does. And if you zoom out and take that long-term perspective, when Bitcoin sets that new all-time high, buying at 26 is exciting because we're getting more sats than when Bitcoin is at 30. If Bitcoin were at 50,000 right now, we'd be getting almost half the sats that we're stacking or that we're going to stack today. And it will be cool when Bitcoin retakes the previous all-time high, sets a new all-time high. But in the meantime, it's super exciting that we're going to stack more sats than we would have been able to. Speaking of which, did you buy the dip? Just because we DCA every Wednesday doesn't mean you can't also pick up sats on the cheap with, if you have some dry powder left over. We do that from time to time here. I do not include it in our data because we are experimenting with the theory of dollar cost averaging. So I don't want to taint that data by including stats that we stack on the side or, on the dip, etc. But that doesn't mean that if the price isn't, fantastic, if Bitcoin's not on sale, that you wouldn't want to pick up extra sats. All right, where was I? So we're 35,404 blocks in the halving, and that's still looking like that's going to be on Elon Musk's favorite day, 4/20, April 20th, 2024. Bitcoin's sale price gives it a market capitalization of $514 billion. So even though we're almost 50 billion, has a 50 billion smaller market cap than last week, it's still in that $500 to $550 billion price range that it's been at for, all summer. I think we saw it as high as 580 billion, but in general, we've been hanging in there above 500 billion. And as I mentioned previously, if you believe in the 4-year halving theory cycle, the 210,000 theory, block theory, we're essentially repeating where we were in 2019. And at this point in time in 2019, Bitcoin had shot all the way up to higher than 10,000. And if you remember, it crashed all the way back down to 3,000. If you look at the last halving cycle overlaid with this halving cycle, we're dipping exactly where it dipped last time. So again, nobody has a crystal ball. Nobody knows what Bitcoin's going to do for sure. But it sure does look familiar to me. Certainly not any cause for concern. The more that Bitcoin rhymes with the last halving cycle, the more certain I am that we're going to see it rhyme after the halving and set new all-time highs as well. So the fact that Bitcoin is behaving as I anticipated it should, if by comparing it to the previous halvings and using that the 4-year halving cycle theory, that's encouraging to me because every cycle you also hear people say this time is different. This is the beginning of the super cycle, or because of diminishing returns, we won't have a 4-year super cycle, a 4-year halving cycle, or a halving cycle bull run ever again. But since the Bitcoin is behaving, in a way that basically mirrors what it did the previous halving cycles, that means to me that there's no reason to believe that it won't continue to do that, and that we, after the halving next April, 6 to 18 months later, we should be retaking the all-time high and setting new all-time highs. So maybe October, November next year, back above 70,000. And who knows where we top out this time before, of course, retracing back maybe as much as 80%, and then, rinse and repeat. At least until, we finally do have that super cycle. For those of you who value your wealth in shiny yellow rocks, this is a bargain for you, because right now you will be able to purchase 1 Bitcoin for just 13.9 ounces of gold, as opposed to 15.2 ounces last week. I say you get the price of Bitcoin at the price you deserve, and if you were waiting, Bitcoin's on sale. This might be your last chance to go from gold bug to digital gold bug. But nonetheless, it will currently cost you, not quite a pound of gold to purchase just 1 Bitcoin. And in a few months, that's going to seem really, really, really cheap. Even if Bitcoin gets a little bit cheaper between now and the halving, all of this will be ancient history after the halving. And when Bitcoin sets a new all-time high, and we're talking 2 or 3 pounds of gold to purchase just 1 Bitcoin, you will never be able to buy it this cheap again, at least in terms of gold. For those of you who value your wealth in pizza, 1 Bitcoin will still purchase you 1,476 large pepperoni pizzas from Papa John's. That is more than 4 years worth of pizza. 1 large pepperoni pizza a day for 4 years. More than 4 years for just 1 Bitcoin. That is an awful lot of food security. And that metric that I like to follow, the Bitcoin's 24-hour transaction volume, I actually don't have. I keep getting an error when I try and load up that website. So some of the data, some of the vital statistics I normally go over, we're not going to be able to go over today. And I don't have time to troubleshoot that because TikTok, it's almost no longer the 23rd. And speaking of on-chain, the mempool has got exactly the same number of blocks worth of transactions pending as it did last Wednesday. There are 42 blocks worth of on-chain transactions pending in the mempool, exactly the same as the 42 blocks last Wednesday. However, it is looking like it's going to be possibly a little more expensive to guarantee that your transaction is mined in the next block. Currently, Clark Moody's dashboard is recommending a fee of 14 sats per VByte to guarantee that your on-chain transaction is mined into the next block, up from 12 sats per VByte last week. They're still recommending that a fee of 6 sats per VByte will get mined within a day or possibly within a week. They recommended that as well last week, and I opened a Lightning channel, so I had a on-chain transaction, and I set it for 6 sats per VByte fee, and it took more than a week, even though they kept saying that 6 sat per VByte blocks were getting mined repeatedly. So keep in mind that even if they're saying 6 sats per VByte might clear in a day, it didn't for me. It took over a week. So if you are going to lowball your fee for an on-chain transaction, make sure you're doing so in a manner where you can adjust that fee, where you can bump it if that transaction gets stuck, or wait until it gets kicked out of the mempool, if it's not a critical priority transaction. Mempool.space is telling a slightly different story as usual. They're saying that a high priority transaction will only require an 8 sat per VByte fee. That works out to about 30 cents in US dollars. So they've always been a little bit lower than Clark Moody's estimation. But it's still up from last week where they were recommending 7 sats per VByte. So even mempool.space is saying it's going to be a little more expensive this week to guarantee your on-chain transaction is mined into the next block. So I do not have the 24-hour transaction rate. That data is currently unavailable to me. Since we spoke last, in fact, just the other day, Bitcoin's mining difficulty had a huge difficulty adjustment upwards. That was an increase of 6.2% in the difficulty it takes to find the next block because hash rate was surging, probably because all those miners that had been turned off in Texas and the southeastern United States because of the hot summer temperatures, where the large commercial miners like Riot in Texas have agreements with the grid operators to shut their mining rigs off when there's a high electricity demand. And now that it's a little bit cooler, it's still hot, but it's about 10 degrees cooler than it was a couple weeks ago, closer to average temperatures, certainly not setting any records right now. So it's reasonable to assume a lot of those miners are turning back on. And Texas, I think, has about 20% of the network hash rate. So a significant chunk of network hash rate was turned off because of those power sharing agreements. We're currently 1,804 blocks away from the next mining difficulty adjustment. The Bitcoin mining difficulty Bitcoin mining difficulty is adjusted every 2016 blocks, which is theoretically every 2 weeks, to try and keep blocks coming in an average of 10 minutes between blocks. I'm also having a little bit of hard time speaking tonight. While I was up in Daytona, I must have eaten something that I'm allergic to because my tongue is so swollen right now that it feels chapped. It's cracked, really raw. I don't know what it was. Guys, have you ever been to Buc-ee's? If you don't know what Buc-ee's is like a gas station, but it's more than a gas station. It is an experience. Buc-ee's is, it's open 24 hours a day. It's going to be the largest gas station you've ever been to. I think they have 140 gas pumps. They have the largest bathrooms I've ever seen. More bathrooms than in any of the largest international airports I've ever been to, and the cleanest bathrooms, way cleaner than an airport bathroom. And they have like a selection of beef jerky, and this counter is 30 feet long with all kinds of different types of beef jerky, and they're smoking brisket 24 hours a day. It's just kind of really cool. And we had 4 different types of fresh beef jerky, a brisket and sausage sandwich. And they've got this thing called beaver nuggets, which are like corn puffs with like caramel and sea salt. I think it might have been the beaver nuggets or something, but my tongue is swollen and raw. I'm speed talking. I always talk really fast, but it's after 11 p.m. now, and I'm trying to get this podcast done and uploaded before midnight so that it's still DCA Wednesday by the time you get a chance to listen to this, or at least start listening to this podcast. So I'm tripping all over myself here and just having a hard time talking with a swollen tongue, little puffy, hard to swallow too. Hopefully I don't need to take a Benadryl or anything like that. I digress though. Blocks are currently zooming in at 9 minutes and 24 seconds, which is a lot faster than 10 minutes. And that's why we're looking at another difficulty increase, another large one. Depending on how things go, it's still, we're still almost 2 weeks away from the next mining difficulty adjustment. That's looking like it's going to be on about September 4th. And currently it's estimating that it's going to be another 6.3% increase in difficulty adjustment, but in mining difficulty, but it's too early to tell. So, we'll have to wait and see. Real quick, thank you to those of you listening on your favorite Podcasting 2.0 apps, such as Fountain or Breeze. Podcasting 2.0 not only lets you support your favorite podcasts, but you can also earn sats by listening to your favorite podcasts on Fountain. And one of the ways you can support your podcast is by either streaming sats on a per minute value for value basis, or by tipping with a boost, which is where you send a lightning message to the podcast, and it's you can send a certain number of sats with that message because it is a lightning transaction. And we do have one boost read. Leggy boosted us 5,000 sats. Once again, thank you, Leggy. And Leggy says, I am walking through the forest while listening to this episode, and I thought, damn, forecast says I should have 3 hours until the thunderstorm. Then I realized it's in the audio, smiley face. If you listen to last week's episode, there was a heck of a thunderstorm crashing and banging here in Florida. And, sometimes the noise canceling does a pretty good job of cutting it out. But going back and listening to that audio, definitely there were some strikes that were really close that literally shook the building. And apparently a significant number of those made it onto the audio. So sorry for the fright, Leggy. Didn't mean to make you think you had to cut your walk short, but it was kind of an interesting day. So thank you for the boost, Leggy, and thank you for all of you who listen to your favorite podcasts on Podcasting 2.0 apps, because that's, instead of listening on any of the traditional old school podcasting platforms, it's neat to start using some of these some of the newer Podcasting 2.0 apps that help you contribute and help you give back and help you support your favorite podcasts. Speaking of our listeners, our geographic distribution of listeners has still not changed. The top 10 countries for our listenership is currently number 1 remains the United States. So thank you to my fellow Americans here in the United States. Number 2 remains Argentina. So muchas gracias, amigos in Argentina. Number 3 remains Germany. So Dankeschön. Dankeschön, mein Freund in Deutschland. Number 4 remains Luxembourg. Also Dankeschön, or Morien, to those of you listening in Luxembourg. Number 5 remains Canada, so thank you to our neighbors up north. Number 6 remains Spain. Muchas gracias, amigos in Spain. Number 7 remains Venezuela. Again, muchas gracias, amigos. Number 8 remains Colombia. Muchas gracias, amigos in Colombia. Number 9 is still Sweden, so thank you to those of you listening from Sweden. And number 10 still remains Singapore. So thank you to those of you listening in Singapore, and thank you to those of you listening from wherever you're listening. If you want to see your country get into the top 10, it wouldn't take more than 1 or 2 listeners to bump some of those countries up because, for example, Mexico is still hanging in there at number 11, and they're just a fraction of a percent under Singapore. So it would only take 1 or 2 friends from Mexico to start listening to help boost them into the top 10. But again, thank you from wherever you're listening. A real quick breeze through the news. There's a lot that I wanted to talk about, but I'm pretty much out of time. I want to get that stack in. As usual, a lot of the talk is the price. I've already discussed that the price going up and the price going down is not unusual. And a lot of the media, whether they're pro-Bitcoin or Bitcoin haters, have been making a lot out of the dip in price recently. Even CoinDesk, for example, said Bitcoin bulls are mulling the meaning of new Fed messaging on inflation and interest rates. Bitcoin suffered one of its more dramatic declines ever last Thursday, at least in part thanks to the realization that a strengthening economy means interest rates are likely to stay on the rise. So CoinDesk hinting that the economy in the United States is doing so well, and that's why Bitcoin crashed. Bitcoin Magazine says Bitcoin volatility returns with a 15% drop. After a prolonged period of muted volatility, the Bitcoin price had a violent swing to the downside, clearing more open interest than the FTX collapse. So there's a lot of people suggesting their theories for why the price of Bitcoin took a little bit of a correction. Nobody really knows. One thing that does seem apparent is regardless of what caused it, and I've heard there was, the rumor that Elon Musk and SpaceX sold their Bitcoin, and possibly as soon as that news was broken, that led to the drop. Other people, like I said, are blaming the interest, the economic news in the United States. Still others were blaming the collapse or the bankruptcy of Evergrande in China and the Chinese economy grinding to a standstill. Still others are blaming Binance and the BNB coin potentially being in trouble for spurring the collapse. I want to point out, as I've said before, look at the chart. I've tweeted it out before where they've got the 3 different halving cycles overlaid with each other, and we had Bitcoin exactly at this point in the halving cycle go from about 3,000 up to 10,000 and then back down to 3,000. And if you overlay that with where we are right now, we are on that downside of that little peak, just like it was then. Of course, we had the virus and the shutdowns in 2020 that caused the absolute low, and that was truly a black swan kind of thing. So I wouldn't expect that we would see Bitcoin drop below, 20,000 into the teens again. Who knows? Anything's possible. And if it did, that would not be unprecedented. In fact, it would be just repeating the last cycle. But, the last cycle did have a black swan event. And, you never know when you're going to have a black swan. That's the very nature of the black swans. So it could happen. But all I do know is if it does happen, it's an opportunity for me to stack more sats more cheaply. One more piece on Bitcoin's price. Invez wrote, Bitcoin's inevitable return to volatility. Bitcoin has awoken from its long slumber, with volatility rocking the asset at the tail end of last week as Bitcoin fell swiftly from 29,000 to 26,000. Markets had been remarkably steady recently, with volatility close to all-time lows and Bitcoin range-bound around 29,000. That ought to tell you pretty much all you need to know as well right there. Bitcoin is famously volatile, right? So the fact that we were stuck at 29,000 all summer, in that $28,000 to $30,000 channel, that is more unusual for Bitcoin. For Bitcoin to go flat, for Bitcoin to be boring, that's the unusual thing. That's why you kept seeing those memes with the guy with the stick poking Bitcoin saying, come on, do something. And then, of course, right after you saw the one where he's poking sticks saying, come on, do something, and then the chart dropping off and saying, no, not that. But regardless of what caused the drop in Bitcoin's price, I don't think anything caused the drop in Bitcoin's price. Bitcoin is just being Bitcoin and just doing Bitcoin things. Speaking of Bitcoin, and one of the cool things, if you didn't hear or didn't put 2 and 2 together, 2 days ago, August 21st, is becoming known as Bitcoin Infinity Day. That's because if you turn the 8 for 821 sideways, it looks like the infinity symbol. So 8/21 becomes infinity/21, which becomes, everything divided by 21. So a lot of people, including Michael Saylor, were tweeting out things about Bitcoin Infinity Day. And I thought that's kind of cool. It's fun to have our fun Bitcoin holidays. We have Bitcoin Pizza Day. We kind of have Proof of Keys Day still. And now apparently we're celebrating Bitcoin Infinity Day. That's kind of neat. Speaking of price, the other thing that I don't know if this is coordinated or just everybody seems to be coming up with this question at the same time, but one thing that I've seen or heard or read one too many times for it to be a coincidence that really caught my attention was the how much Bitcoin do you need to retire? And I've seen this in articles, I've seen this on Twitter, and just yesterday, the Simply Bitcoin podcast did an episode entitled How Much Bitcoin Do You Need to Retire? And that's kind of, I don't know. I don't even like to look at it that way, because that entails that you're looking at Bitcoin as a get rich quick thing. Like, you want to stack Bitcoin because it's going to go to the moon, and you're just trying to make some money so you can, live on your tropical island and to never work again. And while that would be really cool, and if you're an early adopter, and I think we're all early adopters still, maybe you deserve to get rewarded for helping support Bitcoin. We're running our nodes, we're maybe mining at home, we're doing everything we can to orange pill our friends. So yeah, you deserve the fruits of that. When Bitcoin does go to the moon one day, that's certainly not a you got lucky thing. You put in your dues, but the whole I'm stacking Bitcoin to retire thing it's not the point. We're stacking Bitcoin because we want to be a part of the new economy, because we know that fiat is a Ponzi system. The fiat's the real Ponzi scheme. That fiat is it's theft. It's the money that's purposely created for free by people that benefit from it, that print more, knowing that it's going to devalue your savings, that your labor, your time, so that they can give themselves more free money and be the wealthy elite, the political elite, control governments around the world by throwing money at politicians, by buying politicians, and by buying influence with money that they can print for free. That's why you should be stacking Bitcoin, because fiat currencies ultimately fail. You should want them to fail because they're inherently unjust, and you want to be in a position where you are ready when that happens, not because you want to retire at 30. That would be cool, but that's not the point. And whenever I see all the podcasts parroting the same thing, it's kind of like, when you're watching the news about something controversial, and it doesn't matter whether you're in Atlanta or New York or London or Berlin or Tokyo, and the news all leads in with the exact same verbiage. They use the exact same line, like the threat to democracy or whatever. It's a coordinated thing. It's like a conspiracy. That something unnatural. This isn't just something that everybody miraculously thought of at the same time. There's something pushing that, and I don't know what it is or who it is, but for some reason that seems to be the common thread. If you didn't notice it, maybe it's just me, but I did. I've seen that a lot. And then when I saw the Simply Bitcoin podcast, and that was the theme for the Simply Bitcoin podcast on Monday, that made me suspicious. Not just slightly offended, but suspicious. So who's pushing that? There's a narrative being driven, and I don't like people trying to drive narratives. I like things to be organic, and that just doesn't seem organic. All right, let's get to it, because I've already been talking for about a half an hour, and we're trying to get this wrapped up in the next few minutes so that I can get this published before midnight. Again, today is DCA Wednesday, and what is DCA, you might ask? DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, this is going to be our 109th stack. Plebs, we started stacking all the way back on Wednesday, July 28th, 2021. So far, we've stacked 108 times. So our equal portion is we decided we were going to stack $20 a week, $20 every Wednesday, and our regular interval was weekly, every Wednesday. And so far, we've stacked 108 times, converting a total of 2,160 US fiat dollars into Satoshis, including $48.60 worth of fees that we've paid to Cash App. And that has earned us a stack of 7,477,206 sats. And we're underwater because we've purchased those at an average cost basis of $28,887.80. The cool thing, though, is we're going to buy cheaper than we have in a while, and that's going to lower that average cost basis, that average purchase price when we do. To purchase, as usual, we're going to do so using the handy-dandy Cash App. I love the Cash App because I think it's the easiest way to stack at least small amounts. If I were going to make a big purchase, I would probably use an exchange that didn't charge the 2.25% fee. But for buying small amounts, that 2.25%, it's going to work out to about 45 cents. And then Cash App's going to let us transfer that Bitcoin to our hardware wallet for free. So that kind of makes up for it. Again, you do your own research, use the service, the app, the exchange that you feel fits your needs best. If Cash App is available where you are and you decide you do want to use it, they're not a sponsor, but we do have a referral code in the show notes. That is not unique to us. Everybody that's a Cash App user has a custom referral code. But if you use that referral code to sign up, we'll get $5 because you've clicked on that referral link, and you'll get $5 free for signing up. So you'll get paid to help support the podcast. You'll be tipping us $5 and getting paid $5 to do so. And you'll have a handy, easy way to stack sats. Again, they're not a sponsor of this show. I just love Cash App. All right, so I got Cash App open. I've already got $20 in there because I had money on Cash App. I don't normally like to keep money on Cash App. That's one of the other cool things is they'll let you add money and spend it and transfer it immediately. I did use Strike the other day. And when I made the purchase on Strike, I went to send it. I was trying to fund a Lightning channel. And it said, oh, you can buy Bitcoin right away, but you need to wait till your money settles before you can transfer it, which was 3 to 4 business days. So I did not like that. I'm used to being able to buy my Bitcoin and move it immediately. Cash App will let you do that. Apparently, Strike was going to make you wait 4 days before they let me transfer my sats, which was a bummer because it's not as bad as if I were buying coffee from like Good Beans in El Salvador, because I like to pay for my coffee over the Lightning Network. And if I had done that and I wanted to buy coffee, I would have had to wait 4 days to be able to buy my coffee. So that's something to keep in mind. All right, I've got money in Cash App. I'm clicking Bitcoin, clicking buy, entering $20, tapping confirm, and boom, just like that, we've purchased another 74,102 sats. That is 7,000 sats more than we got for $20 just last Wednesday. The last time we got 74,000 sats was all the way back on June 7th, or June 14th, I guess. So that's really awesome. Perhaps as importantly, that's the first time in 10 weeks. First time in over 2 months that we're actually lowering our average cost basis. That purchase knocked our average cost basis down to $28,869.17. So it lowered our average cost basis by $18.63. That is really cool. Again, that's not so important because I think that 28,000, we're going to look back on that in just a few years. People are going to go, wow, man, I wish I could have bought Bitcoin at less than 30,000 or less than 100,000 or wherever we are. So I'm not as concerned about the average cost basis as I am excited about the fact that we got 7,000 more sats than we would have had we purchased just 2 days ago. That brings our total stack to 7,551,308 sats. If you are in it for the money, if you are one of those how much Bitcoin do I need to retire kind of guys, that means that if Bitcoin does hit $1 million one day, which would definitely be the moon in my opinion, our stash of Bitcoin would be worth $75,513.08 US. Even if Bitcoin only hits 100,000, our stack would be worth $7,551.30, which would be a heck of a return for only $2,160. I guess $2,180 after today's purchase. One last thought on that, how much Bitcoin do you need to retire? I did hear somebody put this into interesting perspective because it seems everyone was talking about this, that whatever the halving reward currently is when you first get into Bitcoin is the current amount of Bitcoin that you would take to be like well off. So, a couple years ago, 12.5 Bitcoin was the miner reward. And so if you had 12.5 Bitcoin right now, you'd be, you wouldn't be a millionaire, but you'd be doing really well. Right now, the miner reward is 6.25 Bitcoin. And so If you have 6.25 Bitcoin, you're by no means a millionaire, but you're not doing too shabby. So the next difficulty having is going to cut that mining reward in half, and it's going to be mining a miner reward of 3.125 Bitcoin. And so in that epic, 3.1 Bitcoin is going to be a significant amount of money if you put it in fiat terms. And so then the halving after that, it's going to be like 1 point, something, a little more than 1.5 Bitcoin miner reward. And so like right now, 1.5 Bitcoin is, let's round up to 30. So say 45,000. So around $40,000, which isn't life altering money. But when the miner reward, when that's the equivalent to the miner reward, well, then all of a sudden, if you had gotten in and the people that had 6.5 Bitcoin, when Bitcoin's like $100,000 or whatever, 1.5 Bitcoin would be $150,000, which would be a significant chunk of money. So I guess I'm getting kind of caught up and having a hard time explaining this, but the way it was is that when you get to the point where the miner reward equals what your stack is, that's when you will have achieved enough money that you will be able to retire one day. So if you have, if you have 6.15 Bitcoin as the meme went, like, you couldn't necessarily retire on that right now, but you've got a good chunk of Bitcoin. And then one day when the miner reward, when you come around to the next miner reward halving and the next halving cycle, all of a sudden 6.15 is probably retirement money. So your goal should be to accrue whatever the mining subsidy was when you got in. And by the time you do, that will actually be retirement money, I guess is the way I heard somebody explain it. All right. Didn't really want to get into that anyway, because I'm not in this to retire. I'm in this to not be left out of the new financial system. I'm out of this to not be part of the Bitcoin. So I'm not left out of being part of the Bitcoin revolution. When fiat finally dies and we have a fair money that anyone can use without permission from the government, I want to be part of that. And it would be really cool if I get to enjoy the rewards of being an early adopter as well, but that's not why we're here. That's just a bonus. All right, before we go, I want to ask you to follow me on Twitter. On Twitter, the podcast Twitter handle is @BTC Bulletin Pod. The more people we have following us on Twitter, the more likely people are to see our tweets and find out about the podcast. And the more, not only will we be able to help Orange Pill more people, but it'll help promote the podcast. If you do not have Twitter, I would still like to hear from you. So you can you can DM me on Twitter, let me know what you think about the podcast. But please, follow us on Twitter. If you're not a Twitter person, we are on Nostr. That doesn't really help feed the algorithm, but you can find us on Nostr, and I do like supporting the free and open source, decentralized social media. So that's cool. If you are just a plain old-fashioned email guy, you can send me an email, and my email address is bitcoinbulletin@protonmail.com. I would like to hear what you have to say. Of course, you can help support the podcast by sending us a boost like Leggy did. Not only does that help support the podcast by helping us stack sats, you can get your message to us that way. As you know, we read those on the following podcast, unless it's something really, really out of left field, something obscene or whatever that we just can't read on the air. So far, we have not ever had that happen. Knock on wood. But either way, thank you for those of you listening, whether you're sending us boostergrams, whether you're following us on Twitter, or whether you're just listening and enjoying the podcast and hopefully stacking alongside us. Either way, we'll see you next Wednesday when we help grow that stack together. And until that time, keep on stacking those sats, you sexy sat stackers.